Welcome to this Killick Explains video, and welcome to yet another Viewers Ask question. This is a good one, actually. People have said to me, basically, what is Pisces all about? All right, not the star sign, but the new mechanism that will be made available, is becoming available at the London Stock Exchange. What is it? What's it for? Should I get involved? What are the risks? Okay, so a bit of background and then straight in. Pisces, I will cover what it stands for, and it's as punchy as you might imagine. So basically, what have we got here? Most securities, bit of backdrop, securities being shares, bonds, the things you might want to buy and sell in an open market are available in one of, well, three ways, arguably. Pisces being an example of the third. On exchange is one way. You go through a broker to the London Stock Exchange to buy some Tesco shares. It's not a tip, by the way, it's just an example, all right? Or they're not available publicly. They're available over the counter, OTC. Now that's much harder for retail investors to get access to, but there are private markets out there where stuff is traded over the counter, the bonds market, chunks of it being a case in point. And then you get what I can best describe as hybrids, something somewhere between the two. And this is where a platform, a trading platform like Pisces comes into the picture. Best way I can describe it is a hybrid somewhere between the two. So what is it? Okay, deep breath. It is the private intermittent securities and capital exchange system, Pisces for short. Now, that name doesn't tell you a lot, so what is it? Essentially, and I'm going to cut to the chase here, there's lots more detail available at London Stock Exchange, other places, but essentially it is a platform that brings together two people who weren't brought together very often before. On the one side, you've got people who've set up, founded, and been early stage investors in young, rapidly growing companies, potentially. On the other side, it's where you come in potentially, not necessarily, but where you come in, you've got investors thinking, well, that's an interesting space. I'd like some of that. All right, so I'd like to be able to not just buy things at the London Stock Exchange on the official list, like the Tesco's and the BP's. I'd like some of these more interesting sort of earlier stage companies. And Pisces is an attempt to put those two parties together. So it could be a win-win. Certainly the marketing blur, but the LSE will suggest that, because what's it offering? Well, it's offering these early stage backers, venture capital firms and founders, a source of new capital. It's offering investors something new to buy. It's bringing more liquidity and visibility into what's previously been a slightly unknown space. And in order to encourage that, there is relatively light touch regulation. The accounting requirements, the disclosure requirements are not as onerous as they are in the main markets, okay? And that's nice. And therefore, what the hope is that volume and interest and turnover in these stocks will increase, and that more people will be able to get access to them, either via their pensions, SIPs for argument's sake, or directly. All right, so in terms of main advantages, well, it fills a gap. It is the mechanism by which retail investors potentially can get into private markets. And why do it through this platform? Well, apart from the fact it gives you access in the first place, the idea is it will lower costs. As more and more companies get the hang of it, more and more investors get involved, the average cost of doing a deal in this space will come down. Good for everybody. So, are there any problems? Yes. All right, there are potential problems, and you should be aware of them before diving in. One is what I call the junkyard risk. Now, the LSE won't thank me for saying that. You've got to be really careful with these new markets that try to facilitate trading in illiquid, lesser known stocks. It might be that basically the companies that are not the best bets as investments are the ones that go ironically straight for this market, because they're thinking, well, I can't get anyone else to buy the shares, so I'll see if the retail investor mugs fancy a piece of the action. That's a bit of a cynical view, but just be careful. Valuation will be a nightmare, especially if companies use it to price test. And what I mean by that is, what companies might do is, so brilliant, we've got this kind of quasi-public market, we'll just drop a bit of equity in there, we'll see who bites, and we'll use that just simply as a way of valuing the rest of our business. Got no real intention of making it available to anybody else much, we'll just use it as price testing. The problem with price testing is it does not represent the rest of the business. What I'm saying is, by valuing a minority stake, you don't necessarily get an accurate view on what the whole thing is worth. It will create FOMO, and I'm sure the marketeers will love that. People will go, oh, new market, great, I need to get in there. It's like crypto, I must have a piece of this because I have a fear of missing out otherwise. Well, that's fine. Be curious, be interested, find out about it. That's why you're watching this video. It's why the viewer asked the question. But don't just jump in with an open checkbook. And finally, and directly connected to that point, this will not be, as far as I'm aware, covered by any FSCS safety net. So be careful, right? The FCA do run a safety net for certain types of cash account and investments, but this, as far as I'm aware, won't be part of it if it all goes wrong. So my two messages are, find out about it by all means, all right? Do your homework and let the buyer beware. Know what you're getting into. And on that note, I'll finish on 3 other sources of information on this and related topics. killick.com/resources for other videos. The guide sitting next to me is quite a useful roadmap for equity investing in general, and the quarterly magazine that I edit called Confidant.